In this video, I want to talk about the lightning bolt pattern. And this is something that repeats itself over and over again. And you can see right here, here's the first wave, here's the retracement, here's the second wave. There's another one here. Here's the first wave, here's the retracement, here is the second wave. One more time. First wave, retracement, second wave. Now, if we take an arrow and put it right here, it lines up. Let me move it over one. It lines up. Look where the vertical line is, how it lines up with the white line, the TSL1, turning back up. Okay, you can see it right there. Let's get rid of that for now. And let's put another arrow here and another arrow here. And look what happens to the price. It just shoots up. Same with over here. Not as far, but if you look at this, this goes from 257.75 to 258. What's the high of this bar? 258.66, almost $1. Let's get rid of that one. And clearly you can see that this went from about 257.50 to 259.50, actually higher. Well, 259.74. Big moves. When you know that this is where you should enter the trade, you are getting back in when the smart money is starting to push the price again. Now there's another pattern here that's pretty obvious to the TSL student, and that's the H pattern. Again, we always enter the trade on the first leg of the chair. And you can see how this H pattern looks like a chair leaning backwards. We have the same situation here, except the front leg is a little bit shorter than the back leg. That's okay. And we have it again right here. Again, we are taking these trades on the front leg of the chair. The back leg is the first up move for the smart money to try and head fake the retail trader. So we sit and we wait patiently for the H pattern to form and then get on the trade, take the trade at the appropriate time, at the best possible time. I don't know what the percentage of the back leg entries are profitable. I'm just going to pull a number out of my head from 25 years of experience, and I'll call it 60%. But the front leg of the chair, front leg of the H pattern, is closer to about 80%. So would you rather put your money on the line with a 60% chance of success or an 80% chance of success? It's a rhetorical question, of course. Now you can see my charts are live, and you can see how the price came down, went back up, made this little tiny H pattern, came back down to the 21 moving average, and we have this pattern with the H. Look at the price jumping right now. We also have a slingshot gap, which is my favorite pattern. So when you add these patterns together, not only do you have a moving average bounce right here at the current time, which is, well, I'll just show you what the clock says right here in the front leg of this chair, and it's 15:11, 3:11 Eastern, and this is October 24th. So you've got an H pattern, you've got a moving average bounce, and you've got a slingshot gap. Now, a lot of people will look at the entry. I'm going to change this to yellow just so nobody gets confused. Right where the yellow arrow is, there are a lot of people that would look at this that don't have enough screen time. They would look at this and say, you know, back here at whatever time this is, 1440, the price is about 257.50 and goes up to 259 or whatever I just said. Yeah, roughly 257.60, let's call it, and goes up to 259.60 or 70. They would look at this and they would convince themselves that this recent, very recent $2 move to the upside certainly can't be followed by another move to the upside. Well, if you believe that, if you subscribe to that thinking, you're not reading your indicators. You have to read your indicators. Don't let any confirmation bias come in to cloud your judgment and keep you on the sidelines. Because if you looked at this setup back here, we've got this nice looking H pattern off of a moving average, which is an H pattern and moving average bounce. That's two patterns. Same thing here. Same thing here. The lightning bolt pattern is what confuses people because they see that it has turned down right at the retracement. Well, of course it's going to turn down at the retracement. This is where the smart money tries to fool you. Okay, so this is a picture perfect example. It's Tesla. It's October 24th. Tesla opened up this morning up about $40 on good earnings. I believe it was earnings. And it has just done nothing but produce winning trade after winning trade after winning trade today. And here's 4 right in a row from what time? 1:37. And the last trade ended at 3:15. 3 minutes ago, roughly. So if you got in down here at call it 259, the high of this bar right here is 259.81. It went 81% of the average move. So, fantastic day. Look at the charts, read your indicators, just take the trades based on the rules of the Triple Sync Logic program, and the odds are heavily stacked in your favor. We will talk soon.